Welcome, guys. The data I'm going to share with you today is the saving grace for the Colorado real estate market. I'm telling you, this completely shatters some of the perspectives and predictions that I had going into 2025. And as soon as I saw this chart, I wanted to go home immediately and share with you guys the newfound information that I have about the Denver real estate market and Colorado in general that literally will save this market from crashing. We'll get into that and more on the video. But first, I just want to thank anyone who is joining. If you have questions, shoot them down below. Whether you're tuning in live or not, we'll get back to you. And ultimately, I want to answer your questions, not what I think would be important to you. But in today's video, we're going to go over the Colorado real estate market predictions for 2025. I'm going to show you analytics and data and trends and what you could expect throughout the year of 2025 from the real estate market. And then we're going to get into the shocking data that I am now privy to that literally completely changes the whole landscape and gives a ton of optimism that the market is going to boom, not crash. However, there's a very real trend line that suggests maybe we do, well, I don't know if I'd say crash, but there's more of a pessimistic outlook to the market, and certainly something that I think needs to be talked about. So we're going to get into all of it, but I just want to encourage before we do, if you guys enjoy this information, that ultimately will set you up for success. Even if you're not buying in Colorado, these weekly lives are very insightful and helpful in you making smart real estate decisions, and more specifically in Colorado, but really anywhere in the states of the United States. Now, with that, I do want to encourage you, please like and subscribe the video if you enjoy this content, and hit the notification bell because we want to make sure you guys are up to speed and up to date with the newest information we have on the real estate market. Let's get into data. For those of you who caught the last video, we had some issues screen sharing. I'm hoping that's not the case this time. So I'm actually going to jump into the live video on YouTube so that I can ensure the screen share is working. Let's get into data. And here we are. All right, let's do this. If you are watching, share with me where you joined from. I would really love to know and engage with you guys. Give it a second because there's just a very slight delay in the live broadcast that you're watching in these charts, but I just want to make sure. Yep, it's working. We got the screen share up. All right, guys, we're going to go over just some base information here first. Some economical trends that I think are important to point out, seasonal market trends, etc., that I think you're going to want to know, and build on what I'm going to show you here shortly, the statistic that I think is probably, first off, no one's talking about this, no one that I've heard. Second off, I think this is probably the most important data piece that we'll be showing anytime soon. So give me one sec. Why is my system doing this? There we go. Okay, we got OBS here. Cool. So let's dive in. Here is market stats. Aha! We got it. Guys, we finally figured out screen share. What a big moment for all of us in this YouTube channel. I'm just going to kind of scale this to the window just a little bit better for you guys so you can see what we're looking at. Awesome. Okay. Now, let's take a look at stats. Stats. First up, we're going to go on a journey into just seasonal trends. So we're looking at Denver Metro stats. So there's 7 main counties and zip codes in Denver Metro. That's what we're going to be looking at first. And in 2025, guys, I hate for this to be anticlimactic. In all reality, the market's probably going to do the same thing it does every year. If you can't tell, if we back out 2020 and 2021, where the market was just absolutely insane, all these trend lines are fairly similar. We just changed the graphics. I don't know how much I love the gray, but we're working with what we got. But as you can see, like for the most part, all these kind of, it's like being in a crowded line and everyone's like backed up against each other. That's kind of what's happening here. So that though tells us that all these trend lines are the same. Look at this. Even in 2016, 17, 18, 19, 20, 21, 22, 23, 24, 25, like everything's the same for the most part. You've got a little dip in here in 2020. These are new listings coming to the market. It dipped when the world shut down. And then all of a sudden, if we go back to 2020, I'm just going to show you here. It popped right back up once they let us out of the house. But like relatively speaking, if we back out the pandemic years, because those are anomalies, you're going to see the same trend lines. So I hate to break it to you, but my guess is the market kind of acts the same as it does every year. But we'll just go through some of what we're seeing currently, even though it's in the first week of 2025, and we're seeing lower listings than we were year over year in 2024 and 23. That's really, really good news, guys. And the reason that's really good news is because you see this gap here. I've talked about this before. You see this gap here between the yellow and red. That means we have that much more inventory than we did in years past. So again, let's block out 2020, 21. Here's the inventory levels of 22 and 23, and we have that many more homes for sale in 2024. If the market were to crash, we would need to see a substantial increase in inventory and a substantial decrease in buyer activity. And so we've got the inventory piece here. Well, the good thing, guys, is we also had a substantial amount of more showings in 2024 here than we did in 2023 here. And then you can't compare it to 21 because these rates were just way out of control. But we had really good showing data here relative to where we were at last year. And so that's good news for the markets. Okay. This graph outlines it a little better. So we had that huge gap of inventory. We also had a huge gap in showing demand in a good way. This is how many more showings we were getting total in 2024 than we were in 2023. So we need this kind of balance to stay in line for us to see a fairly healthy, balanced, appreciating market. And I expect that to be the case in 2024. However, there's a very real scenario here that could potentially play out to where the market would be on a downtrend instead of an upward trend in terms of appreciation and price growth of homes. And what would need to happen is this orange, if this orange stays that much above the red or higher, and we see this gap, but these lines be 2024 and this one be 2025, like that's where I think we're in trouble. Because that's a substantial increase in inventory. What we would need to see happen in order for the market to stay appreciating and home values rise, even in a modest amount. I don't expect anything to go crazy unless we see some of this play out, but we'll get to that shortly. Then we would need to see load. All right, here we go. Showing data coming. 5, 4, 3, 2. Thank you, internet. All right, let's go. So we would need to see this also interact the same way I just painted a picture for you in regard to inventory. So we would need this red line to look closer in the gap between this line and in the yellow line, 23 to 24. We would need to see that same or similar gap in 2025 to offset a significant increase in inventory. If we don't see that, that's where the market could potentially go in a downward trend and crash. But guys, I'm sorry to break it to you. I know you really want those 200,000 prices to come back, 300,000, and to get like an affordable mortgage on a reasonably big home. And I'm with you there, but like, guys, I don't think the market's crashing anytime soon. Not in that way. Even if we saw inventory increase significantly, which there's a very real case study of that happening. Guys, the household debt is at all-time record highs. And so we could see a lot of folks who are just in deep water with debt have to sell their home in order to pay off that debt. Therefore, you add that on top of people that are already going to sell. So you've got people in debt, people already going to sell because of lifestyle circumstances. And in all this pent up inventory over the last year, like that is what could potentially drive inventory up in a significant way. That could happen. If that happens, that could knock off the supply and demand ratio enough to where we finally enter a buyer's market and home prices either stay stable or decrease. If I gave you a percentage of a percentage of that happening, like from my perspective, from what I'm seeing, I don't like giving percentages. Why did I back myself into this corner? Let me put a disclaimer in here. I have no business giving percentages. This is all speculation. Who knows what's actually going to happen? There's so many different nuances and things that play on a grand scale that has impact over all of these charts. But again, my prediction at the very beginning of this video, I think the market's going to do fairly similar to what it did last year. And so, I think maybe a 30% chance of inventory going up in a way that is substantial enough to drive home prices down. Yeah, I'd give it about 30%. Or 20. And the reason I say 20 is because we have this data over here that we're going to get into in just a second. Keep teasing you guys with that. Guys, if you're enjoying the video so far, just a reminder, like, subscribe, share, connect with me on social, and can't wait to connect with you and actually have real conversations about the market. So we've kind of painted a picture in regard to what could potentially happen with inventory showing demand and what would need to kind of happen for a healthy, balanced, appreciating market and what would need to happen for the market to crash. We've showed trend lines. I could show you more. Guys, we could stay here for an hour and I'd show you all these trend lines and how they're so similar year after year after year after year. And I'm going to just do it. Why not? Look, from 2020 to 2025, you could see the same trend line for the most part, where days on market, the time you put a sign in your yard to going under contract, is always the highest, meaning it takes the most amount of time possible at the beginning of the year and the end of the year. And then it does this downward trend in a positive way, because this means the market's picking up and homes are selling quicker. And it does that kind of trend down. The market's picking up, the market's heating up, and then about mid-year, May or June, the market starts going the opposite direction, and you get this like almost uncanny similarity in all these charts. Again, the anomaly years of 2020, 2021, even the beginning of 2022 when interest rates were really low, the charts are a little different, but you see the same charts play out, guys. So it's likely going to happen. And here's what that means. Here's what that actually looks like. Is you're going to see the market pick up from about January until like mid-April-ish to like end of May. And it's going to kind of stutter in June, and then it's going to start to make its descent end of June, beginning of July, in terms of buyer activity going up, 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 up. Home prices typically following suit. It's quicker to sell your house for sellers. I hope you're listening. January to like May, really good time. And then the market's going to kind of stutter, and then it's going to fall all the way down into December, meaning buyer activity is going to fall. Home prices tend to retract. Days on market tends to go up. Guys, I could beat that same drum all day, every day for the past, I don't know. I mean, look at the charts. Since 2016, like take out 2020 and 2021, it's almost the exact same stuff playing out here, right? But here is the saving grace. We're finally getting to it, guys. We're finally here. We have finally arrived. Okay? We finally arrived. What you're looking at here, and let me position this better on your screen, is we're looking at the closed number of real estate transactions relative to the population in the 7-county Denver metro area. And you can see from 2011 all the way until 2021-ish, we had more homes selling than we did the population growth of Denver metro. that line inverted, and we have more population growth than homes being sold by a significant amount here since 2021 to 2022, and it's just further widening from 2023 and 2024. This is the saving grace for the market. What do I mean by that? Well, prior to seeing this chart, if we looked back at inventory and showings, there was real concern on my end. And the concern being, we have a significant increase in inventory here. This is how many more homes were sold than compared to 2022 and 2023. That's concerning because we want the supply and demand ratios to stay somewhat healthy and balanced with each other in order for the market to continue appreciating and being, in my perspective, a healthy market. We don't want anything like 2022 and 2021. That was not unhealthy, or that was very unhealthy in terms of the amount of growth we had. But like 2023, 2020, end of 22 and kind of beginning of 2024, they're like, this is a healthy market, somewhat appreciating, not going crazy, and the trend lines look to be in balance with one another. But we have a huge increase in inventory here. And so my very real concern was that if inventory increased even further and we didn't see a pickup in showing demand, then we're in trouble. Meaning, like, I don't know, the market probably does flatline price to maybe a 1 to 2% decrease in values. Guys, 1 to 2. I'm pulling this out of a hat, kind of. I am an expert. I do this stuff clearly every Wednesday. I do a live. But like I have no business giving percentages. But like overall, the market likely would be somewhat flatlined to just a little bit of appreciation or a little bit of depreciation. But here is what's promising. First off, we're keeping up with inventory by the amount of showings, amount of buyers in the market. And this is telling us that we have a ton of buyers who aren't buying. We've got a ton of people on the sidelines, almost like too much. Like if rates go to like 5 or 4%, we're back in trouble. The market is booming, and we're back in a situation where home prices are getting way too inflated. You're having to give away a car and pull out a loan to do your down payment, even though you're pulling out a loan to do your. I'm kidding here, kind of. But in all reality, what this graph is showing us is that we have a ton of pent-up demand. We have a ton of buyers who should be buying like 11, 12, 13, 14, 15, 16, 17, 18, 19, up until 2020. Like these are fairly healthy markets. They were very much a sellers and appreciating market, but that was healthy. So like the fact that we have a gap here, this is very, very promising for the market to stay healthy, to stay appreciating. I don't think a crazy amount of appreciation occurs if all these buyers get out of the sidelines, unless rates go to 5 to 4%. Guys, that would be just like, in all reality, we probably get back to like the market of 15, 16, 17, 18, 19. But at the same time, like we have much more population than those times. And we've got this deficit of that population buying homes. And who knows, maybe we're looking at this graph and saying, you know what, maybe we're going into a renter's economy. And, the over amount of transactions that are to be had in real estate is going to change forever. And we're not going to get back to these numbers in 2014, 15, 16, etc. And maybe that's what's happening here, but I don't think that's the case. Guys, I haven't showed you this chart yet. But let's check it out. This is the total number of transactions of sold properties in the Denver metro area. There we go. As you can see, 2012 through 2019, average was bouncing in between 43,000 homes to 54,000 homes. You had just this is abnormal. The 58,000 to 62,000 in 2020 to 2021. Like this is, if rates went back down to like 2s to 3s, I would expect this. Guys, like what's the opposite of a crash? 2022 or 2020 and 2021. We don't want that. That's not healthy. Just as a crash. I mean, from some perspectives, a crash is healthy. We do need pricing to kind of cool for a little bit. The affordability, maybe we'll do the next live on affordability. Because it's way out of whack. And I would have to imagine at some point there needs to be some bit of a correction in terms of how affordable a home is based on the level of income of the average person in any, specific city or metropolitan area. But back to this chart. What we saw in 2023, and I'm going to get into a prediction here, guys. 41,000 homes. And this is like a 10-year low amount of homes that sold in Denver Metro. And guys, like mass exodus of agents, you probably don't hear about that a lot, but a lot of people that were real estate agents got out of the business. There's just like, this is where the real professional rises because it actually takes work. You can't just get your license and sell a bunch of homes. Like you actually have to work and be good at what you do because there's less of a share to be had. And then we saw a very, very, very slight increase in amount of homes sold in 2024. But guys, here's the promising thing. The promising thing is that it took to the end of 2024. We had a big amount of showing demand, meaning there's a lot of pent up buyers. So even though there's a lot more inventory, we have a lot more buyers. And so I expect 2025 to probably mirror 2024 plus maybe, 5 to 10%. We're probably closer to this like 2012 number. And that might not seem significant, like a 2,000 increase in amount of transactions that are had, but like that is a significant increase. If we're doing 43,000 as opposed to 41,000, that's a big increase in market activity. I highly doubt we get past 50,000 homes sold. Again, unless we see rates go to, we don't know yet what that threshold is to where it just unleashes the buyer market. Meaning, like, is it 4%? Is it 5%? Is it 5.5%? Where we see all of these buyers get off the fence and get in the game. We don't know yet what that number is. I don't know. Like, again, I have no business guessing, but I'd probably say it's probably closer to like anywhere like that 4.5 to 5.5% interest rates gets a fair amount of these buyers off of the sidelines. And maybe we do get closer to that 50,000 number, but in all reality, I think we probably need to be in the fours for that to happen. And then I think it's a very real possibility because that's what rates were down here and we have more population. So like there's a lot to be optimistic about in regard to the market being in a healthy, appreciating way. We just want to make sure it's not so crazy that we find ourselves back in 2020 to 2021. Very, very unlikely to happen. If not, I can guarantee it not happening, but obviously I wouldn't guarantee something like that. But rates just won't come down to 2 to 3%, probably not even 4%. Guessing rates like hang around the 6s this year. I don't think we're going to see a whole lot of improvement. Hopefully we do. Like I hope we get into a healthy balance of like 5s, mid 5s. I think it's healthy for the market. I think you see more of these buyers buying. I think you see this number increase, not to this amount, 50 to 60, maybe because of population growth, but I think that's a healthy market, and I think that's achievable. I think rates will likely at some point go to like mid 5s, if not this year, next year. But gosh, guys, we could be saying this for the next 5 years. In all reality, my guess, what I really think is going to happen is we're going to have a really boring market over the next 5 years. A really boring market. And by boring, I mean, like, it's going to do this. It's going to do this. And we get back to these uncanny similarities in charts. It's going to do this over the next 5 years. And pricing's going to rise, but modestly. Depending on your area, maybe you get 5 to 7% appreciation. But like in all reality, I think if we look at the average price, here, I'll just show you. So we look at this average price over here. And let's go 24 to 23. It ended with actually 2024 being almost exactly 2023. So like we're seeing modest appreciation. Now, if you sold in 2024 up here, you had a ton of appreciation as opposed to, end of the year, that same house would have sold for much less. So I think we probably see this trend line play out for the next 5 years. Modest appreciation, healthy market. And obviously I've walked you through the different kind of levers that would need to be pulled in order for that not to be the case and for us to either see a crash or a boom. But I'm more optimistic than not in regard to the overall market health and us seeing, an upward trend in home values, an upward trend in the amount of homes sold, and overall the market, being a positive, appreciating market, specifically because of that graph I showed you guys where we have a lot of population growth and not enough transactions being had. So that's it for today, guys. I could sit here for an hour saying the same thing 100 different ways. Thank you for joining. I literally, I can't tell you how much I appreciate you guys joining my feed. Like, this is kind of a pipe dream in a way of, thinking I'm going to post YouTube videos and I'm going to grow an audience, whatever. I enjoy doing this. Clearly, I could talk about this all day long. So it means the world that you guys are joining. Please remember to subscribe, like the video so we can get this information out to more people. Ultimately, guys, I do this really, obviously I nerd out on it and there's some enjoyment on my end and I get to understand the markets better. But my passion is getting this information out to you guys so you can make smart real estate decisions, so that you can time the market. No one can actually really time the market, but you can kind of time the market. I just showed you in the graph, if you had sold in March of 2024 as opposed to December, you would have done much better. So I give this information out to you guys so that you can make smart real estate decisions. So if you enjoy the content, subscribe, share. My social media links are below. And if you know somebody that's likely to transact in 2025 and you think they'd find value in this, share it to them. That goes a long, long way, guys. Thank you again for joining. Let's have an amazing 2025, regardless of what the markets do. I'm wishing you guys all the best. Love ya, appreciate ya, and we'll talk to you on the next one. By the way, this comes out every Wednesday. I know we're Thursday, but we're getting back into the rhythm after the holidays. Every Wednesday, you're going to get a Denver Metro update of the real estate market. Tuesdays, we're starting to do Brighton, Colorado. And then I'm likely going to open up maybe a Friday or Thursday to do neighborhood specific or the luxury market or single family versus attached. If we get you guys as my community giving me questions and wanting to get a market update on a specific neighborhood, I'll do a specific neighborhood. We're going to have some fun this year. We're going to do some really, really good content. We're going to have a ton of fun. And a lot of this is dependent on you guys. So feel free to share what you would like to know most. And we'll make sure to meet you where you're at. Again, thank you guys. We'll talk to you soon. Cheers.